Hello and welcome. Thanks for joining today's ATAS webinar on YouTube. I'm excited to introduce Eugen Denisenko, full-time trader and founder of TrailGo, who will share his insights on from luck to logic, how trading with a system really works. If you'd like to try the ATAS platform yourself, there's a free trial link in the description. Let's get started. Over to you, Eugen.
Perfect. Thank you, Pavel, for this kind introducing. And welcome everybody to my first English speaking live stream on YouTube. A lot of you guys wrote me the last days if I maybe could make some content in English, and I thought it would be a great idea to make it with the collaboration of ATAS. And here we are. Today's topic should be from luck to logic. It's basically about the base of my trading. I would like to show you basically how my trading looks like. We will make a Q&A in the end of this session, so please save your questions for the part after my content. And maybe I will then ask or answer on some of the questions. So first of all, I want to apologize, of course, because English is not my native language, but I will do really my best to explain you as much as possible, and will try to explain it as simple as possible. So how in Germany we say my English is not the yellow from the egg. That's a little joke, by the way. But let's start with today's topic. From luck to logic. Why do I set this name for today's webinar? Because I see a lot of guys which are currently gambling extremely this high volatility market, and I would like to present you some things which you can implement really easy into your trading to increase your performance extremely. Trading is not that hard. You have to minimize it on the real important things, like less indicators, less charts, less monitors, and so on, and you will get a great trading if you make a great structure. A lot of traders just deep dive into the market, so they see some impulse or some movements and decide to trade some bullshit which don't have anything real on it, so they just gambling. And yes, that's what we will talk about today. I will try to explain you my whole concept. Of course, we can't go too deep into it because so it's really just the basic things. We have to split it into multiple webinars because it takes too much time to explain the completely order flow, all the analysis, the setups. But I will try to explain as much as possible into today's webinar. Let's start with the basics, with the platform. Of course, I don't only use ATAS, but I will show you today only ATAS because the other things don't belong to ATAS. I use a heat map from a different software because I used it already before ATAS introduced their heat map, and I used to it for a few years and didn't make a switch to ATAS heat map. But ATAS heat map is doing a very great job, so you don't need any separate platforms. I say every time that you shouldn't repair something which is not broken, so never change a running system. That's why I didn't switch any of my platforms. Basically, additionally to ATAS, I use a heat map from a different software, and for the overview when I travel or something, I use a trading view, okay, because ATAS currently do not provide any mobile apps, but ATAS do everything I need mainly. So the trade execution, the trade management, the analysis, and so on. I do everything with others. Before I start explaining my system, I would like to introduce myself to you, so you can understand a little bit about my person. I'm Eugen Denisenko, originally born in Kazakhstan, moved to Germany when I was very young with my parents. Now we are living for 3 years in Dubai, in the UAE, because of some law changes in Europe and in Germany, 2022, which made it very hard for us to trade on personal base. So we moved to Dubai, and now currently we are moving again to Switzerland right now. So now in 2 weeks we will work from Switzerland, which is a very great country. I trade now for over 8 years, and some of you guys saw me or found me on the current World Cup Trading Championships from Robbins, where I'm currently attending and placing the first place with 463%. Yesterday I made another 12%. And that's the reason why we are doing this today, because a lot of you guys came to me and asked for English content. It's not my strength, but I will try my best to explain you as much as possible. So let's go into the good stuff, the trading, and starting from the beginning, because my today's goal is to not to promote some courses. I do not sell any English speaking courses, first of all. So it's really just free content. And if I could help some of you guys to improve your trading, my goal is reached. And if you guys like my English speaking content, I know it's maybe quite hard to understand, but if you like it and you want to see more, just let me know in the comments, and I will try my best to make some more of it and go deeper into the topics. Okay, first of all, what is my trading looking like? I can really say my trading is based on logic. I don't let anything happen because of luck or randomness. Random. It's really everything has a logic. And first of all, I'm not the master trader. I don't have anything which tell me the direction I have to trade to, and it works 100% of the time. Nobody have it. Okay, so you just have to think what kind of tools or what kind of informations I can convert into some ideas which are really working over time, multiple times. The money comes from the risk management. There are guys which are trading on how the moon looks like, okay, and they are maybe making money, or they just coin flip and make a decision, and they earn money because the risk management works. And it depends. Everything depends on the risk management, which is one component I will talk later to. But first of all, what is the main component every trader has to have to make any kind of trades? Before you even think about placing a trade, you have to know the so-called bias. It's my definition of the direction of advantage. It's the bias, and you have to determine the bias first of all before you make anything. So what is the bias? If we have our charts open, this is basically everything I have and I need. We have here 4 charts. Additionally to that, I have a 900 tick chart. I made also a trade today. I showed it already on Instagram, a long trade here, ending here. It was a 4 grand trade. Yeah, here I will explain it also later. It was a risk ratio from 1 to 1, 400 ticks, tick profit stop loss, which I made. By the way, I have currently not that time to trade regularly like prior because of our currently moving. But it works. So you can have very stressful strategies, or strategies which you can make without a lot of stress. And my trading chart is basically the 900 tick chart. I will explain that also later. And we have here also a footprint chart. You should seen that before, and the order book, which shows me one part of the liquidity. Like I said before, the completely auto flow I work with is on another platform, but it's basically a heat map you can also set up on Atas. And there you can see great absorptions, strength of the buyers, the market sellers, and so on. And this kind of charts I use on my vertical charts, so not horizontally, but vertically. So of course, you can't see anything good here because the monitor is horizontally. And that's it. That's everything I need. But we start now with the bigger time frames, because the bigger time frames shows us the bias. Okay, so first of all, we need to know what the bias is. Before we don't know what the bias is, we can't place any trades. The bias is basically what is the current direction of the market. And we have here some bigger time frames for the big picture. Here we are trying to make the locations, to set the locations, which are interesting for us. In a daily time frame, 1 hourly time frame, we have here the 100 Renko chart and the 15-minute chart. Why do we have so much time frames? Because the perspective plays a very big role. So it's relative for us. So if we look at the 15-minute chart, we see, let's say here on Friday, the big short, we have a bigger or better perspective for the prior weeks and days in a daily chart when in the 15-minute chart. So we see much better what's happening really. And what I do is I only use one indicator. It's called the volume profile. And inside the volume profile, we see, in Germany, we say volume, Volumenberge. It's translated, it's just mountains or hills, call it like you want. I will say volume mountains to it. And the volume mountains tells us where was the big, interesting price area where the market traded a lot of volume. And that's the locations what very important for us, because the market tends to run to prices which were accepted before. And if we see, let's say, like the current week's volume profile, we see the main volume was traded in this area here from the 950 to the 880, where the market now already arrived and continues trading. And as you can see, we have different volume profiles. That's basically the monthly volume profile in the daily chart, because I want to see here the biggest perspective of the market. Then we have the hourly chart with the weekly volume profile. You can just set up the market profile in the settings, just add the market profile and just change the external period to weekly. I think the standard is daily, and the daily profile is inside the 15-minute chart I have. And here I just look at the really only today's most important price areas. Where was the biggest volume traded? And of course, we have here the 100 Renko chart, which is a naked chart. I have here only one indicator. It's EMA, a basic average, with a 200, yes, I think it's a 200 EMA. Yeah, 200 period EMA, which is just showing me the current swings. I think the Renko chart is one of the best time frames you can use to see the price action and the current swing. So if you get lost into the markets and you don't know what are really the current direction of the market, just check out the 100 Renko chart and you will see the current swing. So if one look at it, and we see already clearly we have a long price action. The noon session was short. We made it up again, had here a bottom which was holding 1, 2, 3 times, had here price area highs from the today's and yesterday's highs, which were broken, accumulation zones, already bottom, testing, rejection, and already moving up again to the new higher high. So we have, of course, basically here a long price action, and I would never ever have the idea to search for any short trades right now, because the bias in the 100 Renko chart is clearly long. And this kind of analysis, that was now only the price action analysis, I do also on the other time frames. What is the most important things? You have to understand that we as a trader, everyone from us get the same information. So we have a centralized exchange like the CME. So we have the same quotations, we have the same prices, the same volume data. The question is, how do we work with that information? What kind of indicators we want to calculate these prices? What kind of time frames would we like to use? And every trader has his own preferences, and I think it's a very good thing to, even as a day trader, to look every time frame, or to cover up every time frame from bigger to the smaller ones, and then look at what kind or what locations and what price marks are the most important one you have to watch. So that are the locations you want also to trade. And of course, we have a lot of price marks which could be interesting, like magic numbers, 900, 950, 1000, or 500, 550, 600, like the rounded numbers. But we have also very nice extreme points like closes, daily openings. So one part of it's like a checklist for the bias. If everything is approved, you have to go for the long or the short trades. And one thing of the bias is, for me, the opening. So if we have an opening today here at the 795, I want to say, are we currently trading above this opening or below? So if we are, like right now, above the opening, the bias for me is automatically also in 1 point long. Okay. I would be very carefully if we are currently under the opening with long trades. But currently we have a long price action. We are above the opening. And now we are looking on which price. It's basically here the close from the prior day, which are currently rejecting. And but that price will be a great target for possible long trades, or maybe a location where you can execute long trades. And if you have extreme points like that, or possible trade locations like that, you also have to analyze where are the possible targets. For me, like I said before, the areas where we see a lot of volume trading prior are very great locations for targets. Let's say here the 25,022 until the 85. Okay, so if I would make any kind of long trades, that would be my prior location for my long targets. As easy as that. So you don't have to make it any complicated. Just trade your trades to the locations where we had a lot of acceptance before. And that kind of analysis we do in every time frame. So where are the really big volume were traded, like here. Also for the short possibilities, Here we have a cluster, volume cluster. Here we have a volume cluster. And that are the locations where the market, like here, also accumulating, or here rejecting, today also rejecting. It was a cluster few days before. And also, like, where could we trade? You have to look at the volume, and you have to look at the volume anytime, okay? Because some of you guys maybe are now planning to make a big trade, to make a swing trade or something. Let's say from the current price to the 200. For a trade like this, you have to understand that the market right now is in a location where he is balanced. So the market is accepting the current price. The price will only move if the market traders will stopping accepting the prices here. Only after that we will get the price move. If we will see today, maybe in the next hours, the market is moving away from this big cluster, big hill or mountain or whatever, and breaks the today's high. That could be the possible move we need to make sure that we can trade now into volatility, into momentum long. After that long trade, we can target maybe the closing price from, or the closed high from yesterday, okay, which would be maybe 700, 600 ticks. And if he reject here, it's our exit. If he stabilize here in this cluster and moves forward, we will let him run until our big picture location. And that's basically how I analyze the locations with the volume profile. There are also another profile, it's called the market profile, but you have to understand the difference between these two profiles. They are not the same. A lot of traders say they are basically the same. They are not the same. The volume profile shows you the traded volume on each price. The market profile is only they try to sum up the candles. So if you have, the more candles you have side by side, each to other, the more will be the hill. If you have only one candle, there will be nothing in the market profile, just a small stick. So the more candles you have summed up, the bigger will be the mountain. So it's just an estimation, but it will not show you how much volume was traded there. So the only really reliable thing is the market profile, because here we see the real traded volume profile. We don't see any absorptions like this in the market profile. So please use the volume profile. Of course, you need volume data for the volume profile. So it could be quite hard to get a really reliable volume profile into CFD or Forex. Futures, no problem. Okay, so let's move forward. And of course, we have the same thing in the 50-minute chart. So that's basically also a chart. I do my locations. So where are the points, where are the turning points, which we're holding every time, like here, 677 to the bigger high volume node 717. And now we see, okay, interesting. For more than 5 days, we see here every time rejections, accumulations, rejections, also here rejection, and today also a breakout. We tried to accumulate there the main volume. The market didn't accept the price and moved back to the price it was accepting. So he filled this fair value gap. It's not a fair value gap anymore. And now we see the market is holding the 700 constantly. So from 1330, so from noon, there's holding this price. So the price is basically long, because we saw today clearly the market is not accepting the prices under the 700. So the bias is long, and that was also the reason for my long trade. Now you're wondering, okay, we have the locations. So also here, if I do a long trade, where's the target here? Main volume from the prior day, and also the high. I use here global locations every time. And if he breaks also the 170, the next bigger location will be here, the 300. So basically I use every time the high volume zones, because that are the zones where the market had the interest prior. Okay, the market runs to the prices where the liquidity is. So you have to also to understand why the market is moving. The market is not. Some of you guys maybe think the market is moving because there are more buyers than sellers, but that's basically not true. Because you have to understand that to make a trade possible, you need a counterparty anyways. So if you buy something, you need a seller. Okay, so if I would like to buy right now 10 contracts, I need sellers, which were here. Okay, and the market is basically not moving because there are more buyers or sellers, because everywhere, whereas the buyer is also a seller, the market is basically moving because of the liquidity. So you have to track the liquidity. And now we are going into the 900 tick chart. So that's for the bigger picture. We have the daily, the 1 hourly, the 15-minute chart, and the 100 Renko chart for the big pictures. And as you can see, I have only one market. So I trade only the NASDAQ, and I would recommend it to you also. Please, if you want to trade successfully, just do one thing. Just do one market. Okay. I trade the NASDAQ because I love the volatility. You can do any trading style. You can scalp, you can swing, you can make classic intraday swings, trades. It's the perfect market for me because it's very fast. I love fast markets. If you have problems with the volatility of the NASDAQ, get used to the S&P or maybe to the crude oil. They are very great markets for beginners. But don't do anything, okay? Like gold, CL, NASDAQ, you will get big problems, and you can be as much as concentrated as if you just look at one market at a time. There's another thing, if you trade markets which are correlating, like the S&P and the NASDAQ, it's okay. You can use there also some nice strategies, like the correlation gaps or imbalances, divergences. You can use them as a strategy. But I can really say that when I started to trade only one market, and I had really everything before, NASDAQ, no, it was the S&P, gold, crude oil, the oil, euro, dollar. When I removed them all and just concentrate on one market, my performance increased incredibly. So just trade one market and become an expert in this one market. Okay. And you get a much better feeling for this one thing. So if we have all the locations, we have the bias, the main bias of the bigger time frame, like today. Of course, we have to know where to trade. So the setups, and what I can say to the topic of setups, you have to make it really as simple as it is. You have only 3 possible events. First of all, it's a breakout. Secondly, it's a rejection of a price area, and the last one, it's just trend following. Okay, you can just follow a trend. So just jump on the train and follow the trend. So now you have to understand where to trade these possible events. So if I know the bias, the overall bias is long in the bigger time frames, the advantage is long, of course, I will reduce my time on looking on short trades. I will try to just find the long trades, and the best possible way for that is the price action in a 900 tick chart. For me personally, so you don't have to use the 900 tick chart. It's the equivalent to the M1 chart, but I love charts which are not attached to time, like the tick chart. So the candles are building up by each 900 ticks. Some other guys also work in my company are using the volume charts or range charts. All of them are great, but you have to find something you really like and you can work with. For me, it's basically the 900 tick chart, because for me the price action in the 900 tick chart is the best one. You can try it. Of course, you maybe also ask, why do I use blue and gray colors of the candles? It's basically because I want to remove as much emotions as possible. And if you use green or red colors, it's attached to good or bad. So I used to try something neutral, like really simple colors. So like a blue and a gray. For short, the gray. For blue, the long, the movement up. And you can try it yourself. Maybe it will help, maybe not. Some of you guys are using orange or purple. For me, it's the blue and the gray color. It's very nice. I trade much better without the classic green and red, because it's not attracting that much, the blue and the gray. So what do I do with the 900 tick chart? Basic price action. It's really that easy as it sounds. You don't have to, you even, if you master the price action, you don't even need a heat map like I use for order flow. You have one of the most important order flow indicators are the CVD. It's the cumulative volume delta indicator, which is also standard in ATAS. You can just add it into your chart by clicking on indicators and the CVD. And I have here also the demand index. It's basically an indicator which includes volume and price movement into its calculation. So it's basically measuring the movement and adds the volume to it. So the more volume is trading in a long movement, the bigger is also the movement in the demand index, basically. I have a very long video for this indicator on my YouTube channel, but it's on German. So just ask ChatGPT or maybe some other, maybe you will find some other explanations in the internet about the demand index, but it's a very great indicator also. But the most important thing is the CVD, because, as I said before, what is moving the price? It's basically the liquidity. So to say the price is moving because there are more buyers is wrong. The price will not move if there are more buyers. It's like, let's say here, this area. Okay. And we see here a great example in the CVD. What is the CVD? The CVD basically just showing you the accumulation of the market buyers and the market sellers. So there are two kinds of traders. We have the market traders and we have the passive traders, the active traders and the passive traders. The active traders are basically the market traders, and the passive traders are the traders which are getting into the market passive with a limit order. And you can sell as much as you want. If I would be a market maker or a bigger institutional trader, and I put here like 1,000 lots into this price, the 35, you can sell as much as you want. Yeah, like 10, 100, 200, 300. The market will not move because I am absorbing everything. And this is what you see also in the CVD. This CVD just showing you the market buyers and sellers. So if someone selling a market constantly into the 35 and I'm sitting here with 1000 lots, the market will not move by a tick because I'm absorbing everything. The CVD will moving down, 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 but the price are still staying still on the 35. And this is what we call a divergence, because we see the CVD is falling, the market not. And this is what the absorptions is looking like. In a heat map, you will see bigger bubbles, very big bubbles with the absorption. But in the CVD, you just would see, like here, the CVD is collapsing. The price is not really moving. So we have this low here. We have a lot of selling pressure, market, but the price is not falling that much. And the reason is because here are some bigger buyer, market maker, institutional trader, which is buying passively. So it's wrong to say, yeah, the market is falling because there are much more sellers. That's not true, because you have to need also find the counterparty which are buying these contracts. And with this kind of tool, you can find absorptions. So that's what I say. Why I say you don't even need a heat map to see absorptions. And with this kind of situations, you can trade rejections, because there are 3 simple rules for a perfect rejection. It's the components are basically, for a great rejection, you need 3 things. When we are running to a point like this, we had already, it's basically higher high, higher low. This higher low was tested 1 to 3 times. Now here the 3rd time or the 4th time. When you see a location get attacked like this, just check out what is happening in the order flow. If we see this kind of selling, and there are selling, I think, few hundred lots, we will check it out if I close this one. But if someone sells here few hundred lots market, and the price is not breaking this kind of location, but then you can be sure here sitting a big buyer which are absorbing this location and don't want the price to move under this higher low. So what do you want to see to trade the rejection? There are 3 things. First of all, you have to spot the absorption. So we see there are a bigger buyer which are absorbing all this selling contracts. Like I said before, you could see it much better in a heat map, because you see there are very big bubbles from market sellers. The market is not moving. So first of all, you have to spot this absorption. Secondly, you want to see that the counterparty is moving. So the selling pressure getting much lower and lower. And third, of the last of all, you want to see that the buyers are stepping in, the market buyers. And the market buyers, you can basically see it when the market selling is stopping and the market buyers are entering, the absorption was successfully. So the passive buyers were absorbing this location successfully and now pushing the market with the active orders, market orders. And this is what a perfect rejection looks like, which you can trade perfectly. So basically, we have a nice long price action. What is the long price action? It contains basically from, like here, we had, first of all, this start. The range was broken, lower low, lower high, lower low. And then we had here a accumulation, a range. The market was trying to make newer lows, but here at this point, we saw, okay, that was the today's low. The market is moving higher and breaking this new lower highs. And there's one thing you want to see in price action. We have two kind of swings. We have the minor trend and the major trend. In this case, this swing here is the major trend. This whole thing is the major trend. And the major trend is breaking when 50% of this major trend, like here, oops, arrow is too much. So like this, we have here the 50% of this bigger swing. This one is the major trend. So it is short, basically. Here we can see now is building up a minor long trend. We have a minor long trend in a major short trend. In this case, the overall bias is still short. So the advantage is still short. It could be a rejection at this point. So if he move back and break this kind of locations, you can easily took here the short trades to the new low, to the new lower low. If he breaks 50% of the swing like this and then builds a new long price action, we will now have a minor long trend and major long trend like this. And as you can see, the price action or the price here, the lower high from today's morning session was the main turning point for the rest of the day. So this location was broken. It was at, no, it was not the opening. I can't see the time right now, but I think, yeah, okay, it was at 1:33 p.m. We had the breakout, and the market was also stabilizing at this point over this old lower high. So at this point, we don't look for short trades. The bias is long, not only in the bigger time frames, but also in the price action. We have a long price action. We have here new higher high. The old higher low was still holding. New higher high, higher low still holding, new higher high. This old higher high holding. Now we want to see new higher high, like here. So, and at this point, we see, okay, the market is struggling. We are not able to hold this old higher highs. The market is breaking through them. And at this point, we have a minor short trend. But the major swing is still long. We have still a long major trend. Where's the 50% rotation point? It's here. It's basically this location. This one is the half, the upper half, and this is the lower half. So here's the half of the bigger swing. So of course, above this half, it could be getting into temporarily short swings. But that you of course you can trade them, but you just have to know that the bigger time frames and also the price action and the major trend is still long. So if you get stopped out, if you try the short trades, you know why, because you are trading against the market. If you do some scalps, short scalps, it's okay. There's no issue, but you have to remember every time there is possibility for the long movement. And as we saw here, the minor short trend was building up, new lower low, here lower high was holding a third time. He's breaking down. And at this point, at the 50% rotation from the bigger major trend, here we had this kind of absorption, rejection. And from this point, that was the best chance to get into the long trade, or maybe here, this accumulation zone, this small accumulation, we had the double top. After that breakout, or after that break, we had the best opportunity to get into this absorption also and trade the long trade. If you want to be safe, you would get into it only here or maybe here. If you are some risky guy, of course, you can jump into it right after the absorption. But if you want to be safe like me, I'm yeah, I try to really make good decisions, safe decisions and entries. I would maybe wait until the breakout for this high, and then at this point we are building up a new minor long price action into the major long price action, and that's basically the basic price action everyone should know. And it's very simple if you do it right, and you don't need the fancy indicators everybody's showing you. Just 1 2 indicators like here, the CVD for the order flow, and for the absorptions and the divergences, and maybe indicate an indicator like the demand index, which is showing you how is the selling or the buying pressure. So if the market is moving up very strongly, but there is not much volume buying, you will not see any bigger um, movements here in the demand index. And the 0 point is the turning point. So he likes to break temporarily down the market if we break the 0 point, like you had here at this time at the high. We saw there are not much buying pressure anymore that after this kind of buying. So we got into the rejection, and also the demand index, as you can see here, had a strong move to the bottom because we had here a bigger sell-off with a good move. So at this point, crossing 0, we could make a small scalp trade with 140 ticks against the bigger time frame, against the bias. So what I would like to say is just basically be sure what is the advantage, the current direction of advantage of the market, and try to find your setups, your entries with the price action into a smaller chart like the 900 tick chart. It's the 200 tick chart in in the CL market. I think it's the 1500 in the S&P I used. You can just configure it here, tick, and click on add, and you can add here a custom period. And yes, that's basically my kind of trading. Okay. Now the third component of my trading is, of course, the trading style. So I have some multiple trading styles currently. I made a lot of scalping. Scalping is basically there are some scalping is basically what I can say is, if you really want a stressful trading, you concentrate on the lower time frames. If you want to avoid stress in your trading, you have to trade bigger time frames. I guarantee you it will change a lot. So if you're currently struggling day trading, it's the main reason is because you get trapped into ranges like this. So you have to understand that in 80% of the time the market is ranges. So let's say here we have a range, we have here a range, we have here a range, here's a range, here's a bigger range, here's a range, and now we are ranging again. So what you are basically trying is to make money this movement, this movement, this movement, this movement, this movement. So you have to find really the perfect entry. Timing is everything in day trading. And in volatility, like right now, it's not that easy to find the perfect entry for movements like that. You have to spot absorptions like that. You have to see and overlook everything. So most of you guys will never make it to get used of 1 2 3 4 of this only 5 opportunities of a day. Most of you will get trapped in this kind of ranges. which is 80% of the time in the trading day. So you get stopped out every time because your stop losses are way too small. You have to use really big stop losses to get out alive from this kind of ranges. And most of you guys just get stopped out 1 time, 3 times, 4 times, 5 times. 5 times 60 ticks are 300 ticks, and you are just fighting the whole day to just cover up your losses. So you don't even make money. You're just fighting to make up your break-even point, and that's really not worth it. So just don't try to get into this really very difficult opportunities. You have to be very good at timing. It's the most and the hardest part of trading, the timing, to find the perfect timing with the exactly perfect stop loss. I can tell you as it is. So I saw a lot of traders because I'm coaching also a lot of traders, and the trading increased extremely. Then they just concentrated not on this smaller time frames, 1 minute, 5 minute, 900 tick charts, but just looked at the bigger time frames. And don't trade with 50, 30, 100 tick stop loss. Use 300, 400, 500 ticks stop loss. Like my trade today. I don't have the time to overlook everything, and I just basically saw exactly this kind of opportunity today. That we had this short price action. Of course, I used also the volume. You can measure the volume also in charts like this. Just click on the pencil and get into the volume analysis and the market profile and TPO. Now you can just place it over the candles, and at the point of my trade, which was basically here at the 716, I saw exactly the movement of the volume back to the prior main volume. So the main volume was here. Then we had this short price action. Okay, we had accumulation here, and it was not enough. So the market rejected this price area, and we saw that the lows moved up, moved up, moved up, moved up, moved up. Also the highs also moving up, moving up, moving up, moving up, moving up. And at this point, you can clearly see, okay, the prices under the 700 were rejected, and we don't have the acceptance in this area. So the price will grow back to the prices where the acceptance was. So in the range from yesterday, okay, that was the range from yesterday. At the low, I had a great opportunity to see these rejections again. We saw market buyers stepping in with the CBD, and at this point here, I had my entry, and the target were 400 ticks. A little bit more, 430, I think. And basically, it was just trading on the low from the range to the top of the range. So that's it. Just basically trading the range. And it took some time, but in the end, after the opening, I got the take profit here at my location. That was the trade today. So basic price action, rejection setups, which you could trade here. It could be also a breakout trade. After the breakout, you can enter this kind. So in German, we have the term Sammelzone. It's basically a cumulative zone. So if you have a price area like this, where we have a small range, you can just screen the extreme points of the range, like the bottoms and the tops, for breakouts. And if you see the breakout, just step in and set your stop loss maybe at the bottom of the accumulation zone and just let it run into the direction of advantage, which was long at the time when he broke the 50%, the half of the main swing, which was at the 650. So nobody had really the advantage if he made any short trades over the 650. So just try to trade with the market and not against the market. And if you use really a bigger stop loss, like 300, 400 ticks, of course, your take profits should be 300, 400 ticks, then you will really get a really less stressful life, because you just set and forget. Just set your take profit and let it fill or kill. Make 1-2 trades a day. One trade a day is enough. Try to maintain a minimum of 60-70% hit rate. 60% is enough to get profitable, and you will get profitable. Trust me. There are also a big issue with traders blowing up accounts very fast, very quickly, or getting emotional while trading. The only reason why traders are getting emotional in trading, the only reason is because they are trading position size they can't handle. So you will be much more confident and stronger when you trade positions which don't care you if you get stopped out. So please don't risk 10, 20, 30, 50% of your account in one trade. It will destroy you every fucking time. So just risk just risk as less as you can. 1%, 2% maximum per trade, and you will see your growth, the growth of your account very fast. Because of course, the more you earn, the bigger position sizes you can use, while keeping the same percentage risk, and you will get a very fast, very fast growth of your account. So please, if you have the problem that you're struggling emotionally, the only reason is because of your lot sizes. You risk, or you trade too big sizes. Reduce them, and you get much more relaxing trading. I can guarantee you that. Okay, so that's basically really as simple as that. My trading. There are of course much more I can talk about, like the order flow. The order flow is a very big topic. We can talk about it like 4, 5, 6 hours. But for that, we need some more tools like the heat map. There are also some more cool indicators which are detecting bigger movements in the order flow. But it's not necessary. Like I said before, you have really to reduce your trading to the minimum. The less charts that you have, the less monitors you have, the less information you have to work with, the better you will trade. Yeah, because all the traders using 20, 30 charts and 5, 6 monitors and 20,000 indicators, they're just irritating themselves. So just really think about what are the charts you need in your trading, what kind of informations you need to get calculated through some indicators or oscillators, and that's the only thing you need. Of course, you have to calculate your trading plan. So what are what are my targets? What are my daily stop losses? How should be the growth, and so on. Of course, the trading style. I didn't talk about the trading style because there are also a lot of things like scalping. Basically, you can scalp very simple. We have here the demo account. Edit strategy. You can use this risk reward ratio from 1-to-1, like 60-60 or 20-20, 30-30, and just try to scalp up and down with the current order flow, with the current momentum. Get stopped in. There are also strategies like negative risk reward ratio, like use 6 take profit and 30 stop loss. If you get stopped out, you have to make 5 wins to get back. But in this kind of volatility, it's you mainly get stopped out with your take profit. If we maybe say we are here to take profit on the 900, and we would like to trade around the 500. Now we're getting stopped, getting in, and now already out. So it's only 6 ticks, but that 6 ticks, if you make 10, 20 scalp trades, I don't recommend that much, but let's say you make 3 trades a day with 2 contracts, 6 ticks take profit, that are $180 each day. Okay, so you have nearly 4 grand a month if you just scalp 3 times 6 ticks TP. It's as simple as that, and you get in and out in few seconds. So now just work on the right signals you will use for this kind of strategy, and you will make money. So it don't have to be that complicated. Or another strategy I use is the position building. It's simply adding more contracts to running position. So the complete difference of traders which are blowing their accounts. So there are really traders where they're adding more size to a losing position to average down their price. Like, let's say you are going here short because you are thinking the market short, and the market is moving up, and at this point you are selling again, you get your average price here. Okay, now it's moving down, you are happy, but then already boom, it moved up again, and maybe it stops you out here, and you over leverage. So never add to a losing position. What I do is the opposite of that. I add to a winning position. My biggest trade, if you follow me on Instagram, you would see that was a reward ratio from 30 to 1. I had an initial risk of 60 ticks, which is equal to $2,500, 8 lots in the NASDAQ, and the ending profit of it was $80,000 in one trade, and it went only, I think, 2 hours or something. And I did it like, let's say here, we are going long with 8 lots, initial position, stop loss is on 60 ticks, the market is moving up, and I use the break-even stop. That means ATAs have a very great tool regarding the trade management. So every time the market is 85 ticks, the trade is 85 ticks up, I secure my trade with break-even, with an offset of 5 ticks. So I can't lose anything more. If I have right and the market moves extremely for me, I add more lots to the position. So I add here 2 contracts. I average my trade entry a little bit up, but because of the current market price and my average entry price is still over 85 ticks, it's still getting secured by the break even. So even if I adding to the winning position, I can't lose anything more. Again 2 lots, again 2 lots, again 2 lots, again 2 lots. And the 80K grand trade was in the end 30 lots. So I started with 8 and ended up with 30. And so you risked here 2,500. Maybe you close your trade here with ending 30 lots or something, and you make maybe 50, 60,000, okay, because of this one move. And this is the so-called position building, where you trying to add to your running positive trade more contracts. And of course, you need the right days for that. So you need volatility, you need very good momentum. But if you have this kind of markets, you will make a lot of money with very less risk. Yeah. And other things, other strategies are basically classic intraday swings, like I said before, like today also, you see your advantage, you see a clear setup, you have your price action, and you just enter the trade and getting in with a risk reward ratio of 1-to-1 or 2-to-1 or something like that. And you will also earn your money because you have a stop loss which is big enough to getting through this range. You will not getting stopped out. You have gave him enough space, and if you trade in the direction of the market, not against the market, you will get filled at your take profit every time. Okay, so think about it. Think about in what kind of market you want to work with. What do you like about the market? What you don't like about the market, and then just make a plan about what kind of trading style you want to use, and what kind of charts you need. Determine the bias, analyze the price action, and you will trade every time with the market, not against it. That's the most important thing. Try to never trade against the market, and it's really simple to trade with the market if you know which techniques you have to apply. And it's basically check out the volume. Where are the bigger volume zones, volume areas? Where we see the rejections? Where do we see the acceptance? Where's the balance? Where's the imbalance? What is the current swing? Where are the bigger extreme points which we want to see breaking? Right now, I would be very carefully because we see clearly the market is still ranging. We can't break this range. But if we see next week a breakout through this range here up, my target would be trading only long right to the 5,022 and the 83. I would never trade here anything short, only long. Same also on the opposite side. If the market decides to go down, we have here the prior month main volume at this point, and I would try to keep my trades short only if the market is breaking this area here. Boom. At this point, the bias would be for me in the bigger picture clearly short, and only at this time I would make any short trades. As simple as it is, it's really not that hard. It's not that difficult to understand that kind of of things. And also right now, what are you wanting to trade right now? What is so everybody right now who is trading? What are your expectations? Right now the market is balanced, so right now placing a trade is absolutely dumb because we are currently in a balance. Of course, if the market decides to move out of the balance, we see here big wicks, and if we see wicks, there are rejections and also selling pressure. If the market breaks under this kind of volume area, of course, maybe at this point we could try some short trades, but also at this point I wouldn't make any short trades. If we break this low here, which we're absorbing and holding the whole day, after that kind of situation, I would maybe consider any type of short trades. But at the time right now, big bias is long, price action is still long, and only if we break here the 690, after that point only, I would make any short trades, not right now. And if you respect all the things, you will get much less stopped out. You will make a lot of profits and can trade relaxing. You will never get irritated from the market or get played from the market, and that's simple. I think that's enough for today. If you have any questions, I see the chat is full of messages. You can type your questions into the chat. I can maybe explain them, maybe not. That's just the basics for today. So you have a better picture about how my trading look like in the whole. And maybe we can resume this webinar next time, where we go much deeper into the real trade executions, the setups, all the situations which could occur, which we can trade, and so on. Okay, let me see the chat. Please share ATAS templates with us. If you would like to use my templates, I can export this workspace for you, and maybe Pavel can add the download link to you in the comment or in the description of the video, or maybe I just can send you a link with the templates. We will discuss about it with Pavel after this stream, and I will share everything with you from this template, or the whole workspace, so you don't have to reconstruct it by yourself. Do you only use ETH for analysis or RTH? Do you differentiate at all sessions? Can you please explain me what the ETH is? ET high? What is ET high? RT high? I'm not familiar with the shortcuts in English, so thanks for your explanation. Would you recommend this workspace for beginners? Yes, absolutely. That I keep my trading as simple as possible, and I think that kind of workspace will be the right thing for the beginners, because you are not overloaded with unnecessary indicators and tools. You really have all the informations you really need for trading. You see where the acceptance, where not, where the imbalances and so on. You see where the wicks, where's the price holding, like here in this kind of area. We see big wicks, the market is holding and pushing also on the upper side. So here is the balance between these two mountains, volume areas. We have to be carefully. That's the bigger range we have to pay attention to. Under this kind of wicks, we have possible bigger short breakouts, and in the upper side here, the bigger big picture long breakouts. It's really the most important things for beginners, and you are not overloaded with unnecessary things. So we have here a German question. I will translate it in English. Okay, the question is, do I use the volume profile only in one color and without the POC? So the POC is basically the point of control, and the POC is in my template here this bigger white looking line, and the POC is the point where we got where we have the biggest high volume node. So at this point we have the biggest revenue from contracts, from lots. It is basically here the 99. And at this POC, we have the point of control. So this is the most traded price in this profile. Of course, also the value area low and the value area high. That's this other two lines, which are basically showing us the value area, which is 70% of the whole contracts were traded. The demand index has similar trends to the MACD. Are the two indicators based on similar calculations? It could be. They are looking the same, but I don't think that the calculations are the same. The formula is a little bit different. I'm not an expert in the MACD, and I don't know if the MACD includes the volume, but the demand index includes the volume for sure. So I don't know if it's the same. It's the same calculation. Your webinar alone provides so much insight into the markets that is enough on its own to make money. I'd like to say 1,000 thanks. Thank you, Frank. What's your profit factor in Robbins Cup? The profit factor, I never calculated my profit factor. Thank you, Daniel. Thank you, Daniel. If you put the volume profile at the major trend when the POC is 50%. No, I wouldn't say that, because if you put like if you put here in the major swing, the volume profile, the puck at this moment was at the bottom, so it's not automatically in the middle. 50% of this swing was here at the 622. But pay attention, really, if you analyze the price action, you have every time the major trend, the minor trend. The minor trend is the smaller trend inside the major trend. It can be also similar to the major trend. So you can have the major trend long and the minor trend long, but you can also have the major trend long and a short minor trend into the bigger trend. And pay attention to the 50%. Like today, it was clearly, as you can see, the major trend from here to here. So that's the major swing. And 50% is exactly here at the 688, which was holding the whole time, also with absorptions. It's, repeating, as you can use that kind of template or that kind of determining the price action every day. It's repeatedly every day. Great. If you have some questions. Okay. If you don't have any questions, then I want to say thank you for my debut here on ATAS EN. Again, I'm very sorry for my English. I will work on that. I'm not that kind of guy which was a lot of networking in Dubai, and I'm just a programmer, a coder, which loves to sit in front of his desk and coding some nice stuff and trading. So yeah, I will work on that, so we can repeat that. And maybe if you like that style of my videos and my explanations, if I could help you, I'm very happy. And if you have following questions, please just mention them in the comments. I will look up on it the next days and will try to answer all your questions. I will talk with Pavel after the stream regarding the templates. I will send them to him, and maybe he can link them into the description, and you can download the same and add them to your ATAS. In the following webinars, I will deep dive maybe into the order flow or some other things, maybe the risk management or the perfect trading plan I use, so you can make a better picture about how you can also grow your account with prop trading, with your own capital. What are the best strategies to work with the money? What is the best risk per trade, and so on. And but this kind of stuff we can make in the following events. Perfect. So I would say thank you, everybody. Thank you, Pavel, and I gave you the last word.
Yeah, I'm here. Thank you very much. First things first, I think this was an unbelievable webinar with you. The content was really precious. And the second thing, I may speak for the others. I hope this is not a language club. So the content is the king, so to say, not the language. I'm really, really thankful for everything. Again, thank you very much. That was really an excellent breakdown of systematic trading and moving beyond chance-based approaches. Thanks to everyone who tuned in today. Hit subscribe to catch our upcoming webinars. And if this added value for you, a like helps us reach more traders. Appreciate your being here. See you at the next ATAS session. Have a very nice day today.